All right, what is going on, Discord and YouTube family, and welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is Sunday, July the 20th, 2025, year of our Lord, and we are here for another crazy review and projection of this market. Last week, the projection on the NASDAQ was about maybe a 0.5% off. I believe the S&P 500 fell short of the weekly projection, but the direction was spot on. The Dow Jones also fell short of the weekly projection, but the direction was spot on. And it hasn't been really difficult to pick the direction, to be honest, right? Like if we're looking at the monthly for the last, I don't know, since April, I've been basically saying, hey, we're going up, we're going higher, we're going higher, we're going higher, right? And this video is not going to be much different, to be honest, right? Like there's just no reason yet, as of yet, that I'm seeing in this market to believe that we're going to get any sort of aggressive sellers come into this market. This market is void of any type of fear, and we are in extreme greed. If you look at any index right now, we are in extreme greed, which is a dangerous place to be nonetheless. But until I see something shift on the technicals, I'm going to follow the trend. That being said, as per usual, we'll be breaking down the S&P 500, the E-mini Dow Jones, and the NASDAQ 100 E-mini futures from the monthly time frame all the way down to the 4-hour, where I give you my weekly projections on that time frame. This video will be broken down in a chapter, so if you want to shift through and go to your particular instrument, then you're welcome to do so. That being said, let's jump right into the charts. All right, the S&P 500 is where we're going to start. The S&P 500, as I stated before, is very bullish. And you can't really say that it's bullish and not give an explanation, so I always do. Every single candle since April has opened where the previous candle has closed and had no desire to trade below that opening, right? If you look at April, or if you look in May opened where April closed, and we never traded back into May. You look in June opened where April closed, and we were never able to trade back into April. You look at, or back into May. Now you look at July opened where June closed, and we have yet to trade back into 1% of the previous month. That is the definition of a bullish uptrend, right? You can't get much more bullish than that. This is the reason why, from a higher time frame standpoint, there's no debate, right? We can argue about pullbacks and all that other stuff, but as far as the direction, it's up, and it's strongly up, right? I'll give you some more things to support that thesis later, but let's drop down to the weekly time frame again, looking at the structure of the candles, looking at everything that was accomplished, and seeing that, as I stated last week, June 30th was the candle that we were trading inside of. And I said it's very rare that we spend 2 weeks inside of a candle. So I was anticipating a break of this candle high. Well, that's exactly what we got. The high of this candle was 63.33. The high of this week's candle was 63.57. So slightly above, but nonetheless, we traded above it. And more importantly, if we're going to look for uptrends to continue, we want to see what we're doing at the lows. More importantly than the higher high is the fact that we swept the lows and immediately found buyers off of those lows and then made a new high. So that is yet another indication on a higher time frame that the market is still in a bullish uptrend. You can try to short this and try to time the top all you want, but with earnings season right around the corner, I caution you against doing that. But hey, well, who am I, right? To the bearish side, however, because we have to consider both sides. In order for me to start to be bearish on this market, guys, we need to break through 59.64. That is the change of character on the higher time frame. Until I see this low break, everything inside of this or above this low, it's just going to be a higher low being placed to go higher. First and foremost, to have a break of structure, we have to get below 62.23 on the S&P 500, and then we need to crack through 61.05. If we get below 62.23, I'm just riding this thing short into 60, the high of this candle, basically into 61.09. And then from there, I'm still looking for longs going back up. The market has just been so bullish. And my big thing is, if you can't beat them, join them. And nobody in here that's watching my video with 50 plus views on it is should be worried about beating the hedge funds. Okay. So if we look at the daily time frame, what did we get? We got a long period of consolidation, right? If you look back on this uptrend, that's been the signature for this uptrend. Once it reaches a high and it breaks a strong high, or any uptrend for that matter. But once it's reaching a high, we get strong consolidation, right? And then we break out and get more consolidation. We got strong consolidation. We broke out, got more consolidation, and then we broke out even higher. Now we're in that strong consolidation that we had basically the entire month. We swept the low, swept the high, and then, well, we swept the high and then swept the low and then proceeded to distribute to the upside. Now, some may still see this as manipulation, and I understand that as well. So we'll talk about the bearish side, right? To the bearish side, this doji candle at the top of trend after running all of these highs could be a sign that the market wants to trade back down. Like I said, on the weekly time frame, this low right here at 62.23 will be my confirmation of those shorts coming in. Otherwise, if I look to get short off this candle, as long as we stay below 63.55, I think it could be valid. If I look to get short, I'm only looking to take it to the next fair value, which in my thesis is 63.0925, or what's also known as a fair value gap on the daily fib, which you will see when I break down my analysis. But just to give you a brief overview, it sits just about right there, right? As long as we hold that area, it lets me know that the retracement is still good, because a fair value gap, after all, is meant to hold retracements. If we get below that level, it lets me know it's not a retracement, and we could start to trade beneath that using that area as a breaker. All right, let's drop down to the 4-hour time frame, and I'll break down my levels for the week. We'll bring out the top-down analysis, which looks messy at first, but I promise you I can make it better. All right, so we come down to the 4-hour, and the levels that we have on our chart thus far, we have a 1-hour resistance zone that I have marked. That level sits on the S&P at 63.4275 through roughly about 63.53, right? Dropping back up to the 4-hour time frame. If we're looking to be bulls, we always want to see the market trade down to come up, right? Or gap up, come down, and then later come back up. But essentially, we want to see the market create a wick on the weekly time frame. Therefore, my analysis is based on the past 11 weeks of price action. The average of those weeks puts us at a percentage gain plus or minus of 3.34%. That being said, if we're going to trade down to go up, there's two levels that I want to see the market tap into. The first level, 8-hour fair value gap, right? And I'll take you guys up to the 8 hours so you can see it. There's an 8-hour fair value gap here. And normally I don't mark these at all, but because the market's been so choppy, it's been closing ranges, right? So every candle has been tapping into the previous candle. So I got to go to higher time frames to find these gaps, right? So on the 8-hour, we have a gap between 63.08.25 through 63.04. And what I'd be looking for is the market to tap back into this level, take the market to the upside, head it into the week, looking for a weekly projection of about 3.34%. And hold for this dramatic effect, right? 65.0450 would be my target on the week, right? About 210 points is what we're looking to average this week. All right. Our weekly projection level would be, that would be 65.1925 from the 8-hour fair value gap. The secondary level that I like to see the market tap back into is trading down to come up once again, finally closing this little gap here on the 6-hour. The weekly fib projection, basically tapping right in the middle of this 6-hour range at 62.9450. I like to see the weekly projection go up again 3.34%, targeting about 65.0450 or 3.34% from 62.9425. That would be my bullish weekly projection. Now, my bearish weekly projection is based off a couple levels, right? So the first thing that I did was I created a supply zone because we're at all-time highs, and you don't have supply up here unless you understand the data. The data tells me that about every day we moved about 0.87% inside of this consolidation. Based off that, I took a measurement up to about 0.87% from the high and low where I would like to see price push up, and created a data high. That level sits between 63.73 and 63.9250. Therefore, I'm going to be looking to play off that level if the market trades up first. First level would be the 1-hour resistance zone that you see here in the blue. From that level, I like to see the market trade down about 3.32% into 61.3175, which would make a lot of sense because we've just been traveling up, 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 and up. We had this consolidation. If this consolidation fails to break out and make new highs, then we're going to break through this. We're going to break through this consolidation, and we're going to be targeting these lows down here, right? So the secondary level that I would like to see price attack would be that data high, right? If we get up to that data high at 63.7375, then I'm looking for price action to push down another 3.33% from the data supply at 61.75 or 61.6175, which would take us back to the daily demand zone. Like I said, creating somewhat of a breaker here, pushing through all of this consolidation would give us a nice pump on the VIX, taking us back to a level where I think the market would love to sit. And again, these bearish levels are not me saying that the market's going bearish. It just gives a better opportunity to buy. So I would like to see these levels tap early in the week. If we don't tap these levels early in the week, strap in, because it's going to be a long week back to the upside. And a lot of people are going to get murdered trying to short this market on the way up there. So that is my levels for the S&P 500. I would like to move on to the Dow Jones now. And if that's all you guys wanted out of the S&P, you're more than welcome to skip ahead to the NASDAQ or the Dow Jones. All right, moving on to the Dow Jones. Again, looking at the monthly time frame on the Dow Jones, you can see that, again, although that there are bears that appeared at the top, right, we're still holding the lows. We're still not tapping into 50% of the previous month. We're not tapping into 60%, 70%. We're barely tapping into 20% of the previous month's price action before immediately finding buyers. Again, very, very, very bullish, right? So what's the target? The liquidity on the Dow Jones, unlike the S&P and the NASDAQ, has not been taken. Do we need to take this liquidity in order to be bearish or to be more bullish? To be more bullish, yes. To be more bearish, not necessarily. But I will be still keeping an eye on this liquidity because it hasn't been taken. Every time we come up here, we fail to take it. So it makes me wonder, hey, what's really brewing underneath the hood? But I'll never know that until they actually deliver price action that way. All right, moving down to the weekly time frame after basically saying the monthly is bullish. Let's look at the weekly time frame. And again, the same thesis apply. Last week, I talked about June 30th weekly candle being a candle that we needed to trade out of its range, either to the upside or to the downside. The S&P 500 and the NASDAQ chose the upside, while the Dow Jones chose to trade below, but they all three broke out of its range, right? As soon as we traded below it, what was the result? We immediately bought it up, which tells me that the bulls are still defending down here on the weekly candle of June 23rd. Does that mean that the bears failed? Not necessarily on the Dow Jones, right? I look at each indice differently. It's its own entity. On the Dow Jones, this is telling me that the bears were able to keep price down, sweep the low, and then finish at the middle, but below the previous weekly open, right? That is somewhat of a bearish trend beginning to start. We have a lower high, a lower low, right? Another lower high, and looking to actually close below that starting next week. One thing that I've noticed about the indices the last few weeks, the Dow Jones has been doing its own thing, but to be honest, it's been the instrument that always tells the truth, right? So eventually the other two will get in line with the Dow Jones. I don't care how long it takes. Eventually the Dow Jones will lead the way, right? We'll give the true direction of price is what I should say. All right. So if we're going to be bearish, what do I want to see? It's the same thesis. To change character, we have to get below 42,088. Otherwise, a pullback below a failure coming down here, I'm only looking to target these previous highs at 43,170 before looking for more upside, targeting the all-time high, right? So if I'm going to be a bear, I'm not looking to be a bear to change character. I'm just simply looking to be a bear as a scalper headed back down about 500 handles. So we'll see where that lies. If I'm going to be a bull, I still would like to see the same thing, except I'm definitely looking for the market to push up higher and take out these all-time highs. Until further notice, the market is very, very bullish. I'll say it again every single video until it changes. When we're looking at downtrends, looking at the daily time frame, one thing that you don't want to see in a downtrend is you don't want to see all of this choppiness, right? What you want to see is a clean downtrend to show who's truly in control. As you can see, the daily time frame on the uptrend shows who's clearly in control. There was no question that bulls were making higher highs and higher lows. Here, inside of this downtrend, it's weak. It's telling me that sellers or buyers are taking profit, and they're also looking to buy up at key levels, right? And because they're buying at the top of the previous close. So that tells me that although this is a downtrend, it's a weak downtrend that really favors the bulls, not the bears. All right. So I'll be watching the daily time frame to fill this gap here from 43,445 to roughly about 43,741 to the downside. Therefore, my first key will be failure anywhere inside of this candle as long as we stay below 44,854 or the previous day high. Then I'm going to be looking for starter positions inside of this wick where the sellers are, anything below 44,777. If you trade the Dow Jones, I strongly suggest you put 44,077 on your chart, because as long as we're below that level thus far, we've been bearish, and every time we get above it, we try to push up bullish. So if as long as we're below 777, I'm going to be looking to short the market, targeting just this daily time frame down here. So those are my levels on the daily time frame. Let's come down to the 4-hour, and I'll bring out all of my levels and discuss exactly where I'm looking for price to go on the Dow Jones specifically. All right, breaking out the top-down analysis on the Dow Jones. Again, we just going to get rid of this in wall. It just comes back inadvertently, just because we don't really need it right now, because the chessboard takes care of all of that information. Again, if we want to be bullish, we want to see the market trade down first to come up. Therefore, I'm looking at this 4-hour CE right here that's also sits right on top of the in wall. We look at the 4-hour, the consequent encroachment of this area is the target for liquidity, right? Like this is where the buyers were before. If they come back down here, you want to see the buyers defend this area, okay? Therefore, I'm looking for the market to tap in either the front of it or go to the back of it, right? If we go to the front of it, it's good because the in wall also sits right there. From the front of it, 43,969, or from the back of it, I'm sorry. Yeah, from the front of it is 44,195. We'd be looking for about 3.28% on the weekly projection, targeting 45,648, finally getting above those all-time highs and pushing us 3.28% higher. To the back of it, we're looking at 43,969, right? And we're looking to target 3.3% up to 45,430, looking for a move of about 3.3%. Now, to the bearish side, you want to see the market trade up to come down. So there's two levels that come of interest. The first level is the in wall here at 44,858. And then the second level is this 1-hour resistance. So if we trade up into the 1-hour resistance first, then I'm looking for about 3.25% weekly projection of about from 44,703. We're looking about 43,258 to the downside, which makes a lot of sense, especially if we do it in the beginning of the week in preparation for the earnings on Wednesday. I like to see the market down about 3.25% so that we can have enough power to push back to the upside. From the in wall at 44,858, I want to see the market again push down about 3.3% at 43,412, keeping in mind that there will be buyers at the 4-hour CE, in wall, and at the 6-hour fair value gap. That's why we get a trend that goes up and down, right? So once we get below the 4-hour CE, we'll bounce off the 6-hour fair value gap, tap back into the 4-hour CE, and then come down, crash through the 6-hour, and then tap into the daily demand zone, which is where, if I had to see it, that's what I would like to see price delivered. Now, these are just my my projections. I'm going to trade what the market shows me, but understanding that I have levels, once the market hits those levels, that's how I'm going to be looking to trade it when it gets there. All right, moving over to the NASDAQ. All right, we get over to the NASDAQ, and as I said on plenty of videos, we are in an AI bubble. Maybe this is the first bubble in history that doesn't pop, but for now, it's still a bubble nonetheless, right? We have projections with no true AI profits yet. That is the definition of a bubble, right? Therefore, if the bubble is coming from AI, that means that tech is going to be the reason why we push. If tech is the reason why we push, then you want to look for the NASDAQ to continue long until there's no more longs to go. Once the NASDAQ turns bearish, it's over with for the market, right? Now, I shouldn't say over with. The pullback should be coming because the market is always going to be going back up, right? I say all that to say that the NASDAQ is leading the way, and everything we talked about is amplified on the NASDAQ to the bullish side. Everything. Meaning, if you look back from April, we closed up at 1966.54. We barely could even wick into the close before we found more buyers. You look into May, we could barely wick into the close before we could find more buyers. Same thing is happening inside of June and July, where we dip down a little bit further, but it's just a sign that I gauge how strong the trend is. If we're not having the trade back into the previous month to find more buyers, then what does that mean? That means that we're supporting price above the close and we're looking for higher prices. That's objectively the fact. All right. Let's move on down to the weekly time frame. And again, just reiterate that same bullish behavior. We talked about this particular candle from June being the candle that the market needed to break above or below. The NASDAQ did that with the utmost confidence, closing above that level, very, very bullish. And then even more importantly, putting in higher lows from June 30th, the week of June 30th, the week of July 7th, and now the week of July 14th. I don't expect anything less out of this market until proven otherwise. Well, what does proven otherwise mean, Hobbs? Well, on this particular instrument, the NASDAQ, a change of character actually starts at 22,582 due to the fact that we closed above the high. Me personally, I'm not buying that. I would need a change of character below 21,586, and that would start to change my thesis. I'd still be looking for longs off this level, looking to target these lows for a higher low, and then confirm shorts from there, targeting back down to the lows. That's how I would like it to play out, but for now, it's all bullish. Therefore, to the bullish side, I have projections that I'll show on the 4-hour time frame. But for now, let's break down the daily time frame. All right, looking over here at the daily, the NASDAQ did also participate inside of that consolidation that we set in for like the first 2 weeks of July. Then we got the sweep of the high, the sweep of the low, and then the distribution higher. We'll find out on Sunday or, Monday, Tuesday, probably by Tuesday, whether or not this doji candle is something that we need to worry about in regards to a straight push down. But be aware that the market will be looking for some type of pullback, usually, right? Historically, we get pullbacks prior to huge earnings. This market is a little bit crazier than a market that I've seen before. If I took you through my yearly analysis, you'd be blown away by how far we truly are up on this market. But ultimately, I'm looking for a slight pullback, only for the market to hold this CE down here. We'll talk about on the 4-hour, only to trade higher and higher. Until proven otherwise, the market is bullish. All right. Moving down to the 4-hour time frame, we'll bring out our top-down analysis. We'll start to discuss the volatility index. We'll move over to some news and then we'll get you guys out of here. All right. Going down to the 4-hour, again, not to beat a dead horse, but in order for the market to trade up, you want to see it go down first. Doesn't mean it can't start up, but it needs to go down. It can gap up and then come down and make that wick later, right? So what are we looking at? Well, we have a data high based off the previous ADR of the last 5 days, meaning the average daily range is about 1% on the market. So I created a data high because we're at all-time highs. You can't have a supply zone unless you understand the data. I understand the data and I break it down in the Discord damn near every day. So if you guys want to know, just reach out and ask me. All right, so what are we looking at? To the upside, if we want to see the market trade down, we have this 4-hour CE, just like we have on the Dow Jones and the S&P 500. Monthly settlement also sits here, so this is a double confluence. So I really like the idea of trading back into the 4-hour CE after breaking out all these highs. So I'd be looking for the market to tap into roughly about 22,902, right? And then trade up about 4.13% into 23,852. We also have an 8-hour fair value gap, which I'll open up a little bit so you guys can see a little better. Let me bring my arrow down here. All right, dropping down or pushing back up to the 8-hour time frame, you'll see that there is an 8-hour fair value gap that sits roughly in between July 16th at 6 p.m. and July 17th at 10 a.m. That created a fair value gap that if the NASDAQ, which is notoriously the most bullish, doesn't want to trade all the way to the CE or doesn't need to, it can also trade right back into the 8-hour fair value gap, splitting 50% of the week basically, and then start to trade up. So that's the secondary level that I picked for the bullish retracement back to the upside. If we do that, I'm looking for about 4.09% into 23 or from 23,133, pushing into 24,059, which is also our weekly projection or our data supply on the weekly time frame. To the downside, if I want to be a bear, then I want to trade from these levels that are our data highs and our 30-minute resistance zone. Our data high sits at 23,400.25. So I'm looking for about 4.04%, targeting pushing through the 4-hour CE, through the demand zone, and then targeting 22,460.50. If we're looking for the 30-minute resistance, that also lines up with previous day high. So I'd be looking for about 4.06% on the weekly projection side, down to about 22,373.25. That also sits slightly above the weekly fib, which would make sense because this market is in much need of a healthy pullback. Will we get it? Stay tuned until further notice. That being said, that is my breakdown for the indices. Let's move over to the VIX to start to build the reasons why I'm looking to be so much of a bull. If we look over here to the VIX on the weekly time frame, what I'm looking for out of the VIX, right, is for the VIX to do two things. One of two things. I either want the VIX to stay in its little range that it's in, right? If it stays in the range on the daily time frame, then it just means we're just going to get a slow grind up, right? If it sells down, it also means we're going to push up. The only way I'm changing my thesis is if the VIX comes back down after making this sweep of highs, right? If it comes back down and closes this gap at 1835, right? And then finds buyers, then we create a new dealing range, right? We create a dealing range from this high down to these lows. And then I would want to see the VIX basically trade between 20 and 18, right? If we can do that, then everything that I just said on the three indices is extremely valid, right? So that's kind of what I'm looking for out of the VIX, just to stay cool, stay chill. We were able to rally all week without the VIX going too crazy, except for Wednesday. Other than that, the VIX has been nice and quiet. Now, if we get a huge spike, that'll be something that I'll find out later on in the week. But that's kind of what I'm looking at from the VIX, staying below the weekly fib at 19.7, staying below the 20s and coming back down to retest these lows. And if we get even lower, we should be looking to target the ultimate low, which is where we will get a bounce from. I'm 100% confident. I take like 95% confident. Anytime the VIX gets below 14, we're going to get a bounce, right? I don't care how they do it. I've never seen the VIX drop below the 14s and 13 level and we don't get a bounce. So that's where I think the VIX is headed. Until we get some type of fear in this market, it's just going to continue to bleed out and bleed out slowly. So that's my thesis on the VIX. Now, let's talk about the news catalyst on the week. We'll start over here with the Forex Factory, right? And I'll take you guys back in time because I was kind of pushing ahead. So we look over here on Monday. There's a no news Monday. Everybody in the Discord should know by now what a no news Monday is, right? It usually just means the market is going to set its range, and then we expect some type of consolidation on Tuesday, or a higher low, or a lower high to be placed. We already know a script for Monday, no news Mondays. So we'll definitely be trading on that day, unlike a lot of people in the land. Anyway, on Tuesday, 8:30 in the morning, I don't know what this dude's going to be talking about, but it's not even labeled as red folder news. And anytime Jerome Powell is speaking, it's usually red folder, but he is not scheduled to, he's scheduled to speak, but it's not red folder news. So we'll see if it's a nothing burger, but it is pre-market. So I thought it would be worth mentioning. On Wednesday, no news again, other than crude oil and existing home sales. But we'll talk about other news that'll be happening on Wednesday. On Thursday, you can see that the folder is bright red because we got flash manufacturing 10 o'clock news, as well as unemployment claims. Would never go a Thursday without red folder news. So if you don't trade, if you only trade red folder news, you at least get to trade one day out of the week. Core durable goods on Friday. We should have all the information that we need from every other catalyst that's going to be in the market. That being said, let's talk about those catalysts. All right, moving on to the other catalysts that are going to be in the market on those Wednesdays. That Wednesday that we don't really have much news. This is the day that I think the market may choose to have a big move in the morning and then consolidate out. But let's look over the earnings report. So on Monday, nothing really huge is happening. Tuesday, we got some boring stocks like Coca-Cola, but after close, we do have Enphase, which is a good company. But other than that, there's nothing crazy. Let's skip over to the meat and potatoes. On Wednesday, we have Tesla reporting and Google reporting after the close. IBM and Chipotle are also reporting, right? These are big companies. Not to mention, I believe the next day on Thursday in the morning, the NASDAQ itself reports its earnings statement. Now, I've never actually seen a NASDAQ report. I never really look at them, but I'm assuming that they would move the NASDAQ, right? That would be my guess, right? The Intel, Newmont, Deckers, and Scholastic, not really a big deal. But the big ones for the week that I like to highlight is Tesla and Google. Do yourself a favor, because I've already done it. I'm not going to do it on this video, but do yourself a favor and go look at their market structure and tell me where you think they're headed into their earnings, right? That's something that I would do if I know that they're reporting. I would look at them and compare them to my analysis that I currently have on the market. All right. So that being said, that is all the information that I have for you guys this week. I hope these top-down analyses are helpful. If you're in the Discord, please feel free to reach out to myself, Hippie Banks, and Des Trades for any additional help that you need inside the Discord. If you're out there in YouTube land, the Discord link is in the description down below. If you like what you see or you're interested in getting more information on how we trade inside of the Trader Shop, please don't hesitate to hit that link. That being said, my name is T Hobbs. This is the Trader Shop, and I'll catch you guys on the next one, man. Peace.